Shares of SmileDirectClub under a little bit of pressure this morning, but the company out yesterday with its latest quarterly results. Company beating on the top line, reporting revenues up about 10% quarter on quarter. We're joined now to talk more about the latest results by Kyle Wailes. He is SmileDirectClub's CFO. Kyle, thanks so much for joining the show this morning. Let's just start with where the business is. Yeah, thanks. Let's just start with where business is today. And we were just chatting in the break about the hope we all have of getting back into the office, getting back out into the real world. Obviously, it's been a challenging year for a number of companies. Yours, no exception there. How are you guys seeing 2021 and maybe a return to some of the trends that you hoped you were on if we had sat here in February of 2020?
Yeah, great question. Look, I would say for us, things are very consistent with what we've been talking about over the past 12 months. And so as we look at it, we began executing against our controlled growth strategy after Q4 of 2019. And the 4 quarters since then have been directly in line with those results. So as you think about the impact that COVID has had on our business, I think what it's really demonstrated is just the overall flexibility and agility of the business model. And this quarter was another example of that. So beat across the board on both revenue and profitability metrics. It was our second consecutive quarter of positive EBITDA as well, and coming in ahead of expectations. We're executing directly against those longer term targets, which is about a 20 to 30% annualized growth on top line, which represents about 5 to 7% growth sequentially quarter over quarter. We're able to come in slightly ahead of that here in Q4, being up 10%, and guide it directly in line with that as well as you look at Q1 of 2021. And I think, just apart from that, as you look at the broader tailwinds across the industry, certainly accruing to our business, be it on the regulatory side or just the overall, minimal competition that we continue to see, the broader acceptance of teledentistry, the broader acceptance of clear aligners across the entire industry. And so all in all, I think it's, more of the same. We continue to stay focused on those longer term targets we've outlined and executing against.
I think investors this morning need a little more clarity on your push into dentist office. So you're in 1,000 dental offices now, a 10,000 goal by year end. Does that move the needle financially for the company this year?
Yeah, so the professional channel, as you mentioned, it's part of a longer term growth strategy that we've outlined. So if you think about those growth initiatives, we've got the professional channel, the teen market, which is about 75% of the market opportunity, but only about 10% of our business, and international as well, which for the full year 2020 was up to about 13% of revenue, about 15% overall for the quarter. So professional channel, is a very important component to that. We've always been agnostic to where consumers want to start their journey. We've always offered the impression kits in SmileShops, and now we have a third option as well, where you can get started actually in a dental office. So we're pretty early in that rollout. As you pointed out, we've signed up about 1,000 practices to date. There's about 150,000 practices around the country. So we've got a very good pipeline that we're executing against, and we expect that to be a more meaningful contributor to our growth as you look at 2022 and beyond. But we're very encouraged by the early results within that channel at the same time.
Kyle, it's Julie here. Do you expect to offer different products linked to that expansion, sort of more complexity in your products for addressing more orthodontic issues?
Yeah, so today we actually, if you look at all the cases that are coming to us today, we're actually treating about 90% of those cases. So it's a relatively smaller percentage of the market today that our product is not addressing. And I think when you really take a step back and look at it, our product is providing, the same sort of, safe and effective, outcomes that you're getting with other invisible aligner products that are on the market today. So, that is a focus. We'll continue to push more into that sub 10%. But as you look at the big opportunity that we're going after, we're providing great outcomes today, which are, directly in line with what you're seeing from other invisible aligner companies as well.
Kyle, how would you compare the regulatory environment for what you sell year over year?
Yeah, I think COVID has certainly helped it. It's been a nice tailwind for us. So if you look at truly the broad acceptance of telehealth and teledentistry in particular, it's been a nice tailwind for us as a business. And, COVID has certainly only helped that as we've seen broader acceptance of teledentistry. So we certainly think this is here to stay. And it's an important component of our value proposition as well, right? We're bringing access to care across all of the counties around the country, and are now in 12 countries outside of the U.S. as well. We're making care much more convenient, because you can do it all through our teledentistry platform and not have to go into into your appointment every couple of weeks or every month. And we're making it much more cost effective as well, at 60% cheaper on average, while at the same time providing the same safe and clinically effective outcome for patients.
And Kyle, I just want to wrap up on something that you said in your prepared remarks yesterday, which really struck me. You said there's no pricing pressure and no real competitor that's kind of playing in your part of the market. I'm curious. I guess you say how you've seen the competitive landscape there, but I'm curious with the thinking to kind of broadcast that to the street and talk that forthrightly, I guess, about where you see the market and where you see your place within that.
Yeah, absolutely. So, as we think about pricing power today, we're the low cost provider in the market at $19.50, and we've got the best unit economics to come along with that. And as we think about the competition, if you look at the barriers to success that we've built over the years with the aided awareness that we have today, the omni-channel presence that we have across SmileShops and impression kits and now dental practices as well, the teledentistry platform that we have, the financing program that we have, which is 100% approval for consumers, the vertical integration that we've built. We've spent hundreds of millions of dollars and many, many years building that vertical integration. So when you look at all that together and you look at the entire spectrum of how we interact with our club members, there's no one out there today at scale that's doing it in the same manner that we are. And so that's what we mean when we say, low cost provider with no competition. No one's been able to replicate what we build. This is an incredibly complex business, and I think it's going to be very difficult for someone to replicate that. It's going to take hundreds of millions of dollars and many, many years to get to where we are today, and obviously a lot of execution that needs to come along with that.
All right, Kyle Wailes, CFO at SmileDirectClub. Kyle, I really appreciate the time this morning. I know we'll talk soon.